Hey, market mavens! Ready to sharpen your investment edge and navigate today's financial twists? If you've missed key plays or been thrown by sudden shifts, stay locked in. This September 1, 2025, is packed with tactics to boost your portfolio. Welcome to AmosFinance, your spot for breaking down markets for all, from rookies to pros. I'm John Hawk, your navigator, and today we're digging into stocks, crypto, global moves, and more. Stick around for my prime tip to guard your gains or seize a big opportunity. If this clicks, smash like, subscribe for daily updates, toss your top finance query in the comments, and hit notifications. Let's grow this crew. We'll hit indices, top stocks, bonds, currencies, commodities, earnings, crypto, geopolitics, central banks, inflation, trends, and a must-know takeaway. How's this shaping your wealth? Let's jump in and turn insights into action. Let's begin with the big picture, the market barometers that set the tone for global portfolios. The S&P 500 closed at 6,460.26 down, 0.64%, weighed by trade barrier worries. NASDAQ slipped 0.43% to 21455.55, showing tech under pressure. The Dow shed 0.20% to 45544.88, a challenge for industrials. Over in Europe, the FTSE 100 eased 0.32% to 9187.34, while Japan's Nikkei dipped 0.26% to 42,718.47 as the BOJ adjustments rippled through. Annually, these benchmarks are still up 10–15%, meaning your $20 KS and P ETF might be $3K higher on the year, but still down $120 overnight. That's how fragile sentiment can be when tariffs flare. Takeaway: such moves can trim 2–5% off global portfolios if unhedged. Positioning smartly means leaning US heavy with ETFs like SPY while treating this pullback as a long-term entry point. Now to the corporate giants, stocks that often make or break investor performance. Apple finished at 232.14, down 0.18%. Solid demand, but duties on Asian components are squeezing margins. Tesla slid 3.50% to 333.87, the sharpest mover, as tariffs cloud global EV shipments. Microsoft held flat at 506.70, proving its defensive strength. Amazon dropped 1.12% to 229.00, while Meta slid 1.65% to 738.70. Year on year, these names are still up 20–60%, but that Tesla dip alone can wipe a month's gains in a day. Imagine a $10K Tesla stake shrinking $350 overnight, while still riding long-term EV momentum. Takeaway: daily swings of 10–20% are possible in tech-heavy portfolios. Mitigate risk by balancing with undervalued or non-tech sectors. Shifting to bonds, the ballast in your portfolio. The US 10-year yield rose to 4.2330%, up 0.0240, signaling steady pressure. The 30-year sits at 4.9170%, higher by 0.88. Abroad, Germany's 10-year stands at 2.7160%, the UK's at 4.7130%, and Japan at 1.6240%. Compared to last year, US yields are roughly 0.45 points higher, meaning a retiree with $100K in treasuries earns $450 more in annual income. Takeaway: higher yields boost income but dent bond prices. Strategy: favor medium-term maturities to balance income and volatility, cushioning 5–10% swings in portfolio value. On to currencies, the lifeblood of trade. The euro trades at 1.17092, up 0.20%, despite ECB easing. The pound at 1.35227 is edging higher, while USD JPY climbed to 147.05, up 0.08%, as yen softness lingers. USD CNY remains elevated at 7.15, while USD NGN is steady at 15.34. The dollar has gained 5–10% year over year versus the euro and yen. For exporters, that's a challenge, trimming margins, but for US investors, it boosts domestic purchasing power. Takeaway: a stronger dollar is double-edged. Use currency ETFs or hedges if you hold overseas assets. Commodities, the inflation hedge. Gold climbed 0.86% to 3546.35, reaffirming its safe haven status. Silver followed, up 1.56% to 41.360. Oil was weaker. WTI slipped 0.63% to 63.75, Brent 0.57% to 67.48, while natural gas gained 2.62% to 2.94. Yearly, oil is down 17-18%. For a $10K commodities fund, that's a $1,700 drag. Yet for airlines, cheaper fuel translates to millions saved in Q4. Takeaway: balance is key. 5-10% in precious metals can offset stock drawdowns when oil slumps. Earnings, the scorecard for companies. Today's lineup: Zscaler, ZS $43.14 billion, Q4, EPS estimated 0.47, NVIDIA, NVDA $4.45, Q2, EPS estimated 1.01, Royal Bank of Canada, RY, $193.88 billion, Q3, EPS estimated 3.29, CrowdStrike, CRWD, $102.86 billion, Q2, EPS estimated 0.83, Snowflake, Snow, $64.15 billion, Q2, EPS estimated 0.27. One beat or miss here can ripple across sectors. Imagine NVIDIA missing. It could shake $100B plus off tech overnight. Takeaway: earnings season is opportunity season. Tune into calls for insights on tariffs and growth. Over to crypto, where volatility is the norm. Bitcoin trades at 107563.00, down 0.69%. Ethereum at 4389.42, up 1.04%. Solana at 198.557, down 2.16%, XRP at 2.72, down 3.32%, and Binance Coin at 869.87, up 1.05%. Yearly, Bitcoin is up 150%, so a $5K position last year is worth $12,500 now, but the same swing can reverse fast. Takeaway: allocate only 1.5% to crypto via ETFs if you're cautious, because while rewards are tempting, risks mirror them. Globally, tensions stay elevated. A new EU-US trade deal triggered tariff pushback in India. Taiwan raised defense spending. Ukraine unveiled new missiles and naval drones, keeping pressure on Russia. Meanwhile, U.S. ties with Russia and China continue to fray. These moves could add 5-10% to inflation via supply shocks, an unseen tax on consumers and investors. Takeaway: investors should diversify suppliers and tilt toward domestic producers for resilience. Central banks are treading carefully. The Fed holds at 4.50%, the ECB at 2.15%, the BOE at 4.00%, SNB at 0.00%, and the RBA steady. With job growth cooling, the Fed is considering cuts, while the ECB pauses amid tariff uncertainty. For investors, falling rates mean cheaper loans and rising stock multiples. Takeaway: position for rate cuts by accumulating bonds and quality equities early. Inflation is cooling but uneven. The US posted 2.7% YoY in July, stable but pressured by tariffs. The UK ticked up to 3.8% on utilities. China is flat at 0%, raising deflation worries. Takeaway: uneven inflation shapes central bank paths. Hedge with inflation-protected assets like TIPS. Pulling it together, stocks dipped on tariffs, bonds gave mixed signals, the dollar stayed firm, commodities slumped, and crypto swung. The theme: risk off, but with sparks of growth in AI and tech resilience. Takeaway: focus on quality, diversify, and don't chase short-term noise. Wrapping up, markets remain resilient, but tariffs are the shadow to watch. Favor US large caps, bonds for stability, and gold or crypto as hedges. Staying diversified could protect 10-20% of your wealth in volatile cycles. If this helped, hit like, subscribe, and drop your questions below. Here's one to spark discussion. What would you do with $10K today? Gold, crypto, or bonds? I'll see you tomorrow. Trade smart.